Tailor trading technique, a short-term method for trading on intraday price movements that relies entirely on odds and interest. This is a method as opposed to a system. Very few people can blindly follow a system, although many find it easier to be controlled by a systematic approach. Since short-term swing-based technique, leads to frequent trades, it is important to know the rules of the game in order to capture profits and look for a true trend. Losses are accepted, simply to take a better position. Trading is conducted strictly to obtain a future result, and not based on what the market can do. Knowing the rules of the game means knowing when to buy or sell, go out or hold. Transactions are based on objective points that are simply the highs or lows of the previous day. The movement between these 2 points determines the true trend. When you trade on fluctuations, manage your expectations. The lower your expectations, the happier you will be and, surprisingly, the more money you are likely to be able to make. Entering the market is part of the pie, but you must also trust yourself to get out of bad deals. It is important to use closer stop orders when trading on fluctuations and wider stop orders when trading on a trend. This method teaches you to expect. Never react. Know what you are going to do before the market opens. Always have a plan, but be flexible. Consider your stop order, support or resistance, before opening a position. Know how to trade in the event of adverse events and get out of losing trades with the least loss. Finally, never trade in narrow, dead markets. On them, the vibrations are too small. Never chase the market. Instead of worrying that you missed the movement, think instead, great. I'll have the movement in the opposite direction. The basic rules of swing trading. Due to the short-term nature of this technique, swing traders must adhere to some basic rules, including: If the market is moving in your favor, move the position to the next day. Plan to go out next day near objective levels. The nightly gap provides an excellent opportunity for profit taking. Concentrating on only one entry into the market or one exit per day reduces psychological pressure. If your entry is correct, the market should move in your direction almost immediately. It may return for testing and exceed your entry point by a little, which is normal. Do not move the losing position the next day. Come out and play the next day in a better position. A strong close indicates a strong open the next day. If the market does not go, as expected, exit at the first rollback. If the market offers you a big profit, take it. If you are in a long position and the market closes flat, indicating a lower open the next day, exit the position. Play the next day with the best position. Use close stop orders when trading on fluctuations, wider stop orders when trading on a trend. The goal is always to minimize risk and make money. When in doubt, go out. You have lost your compass and your game plan. This model sets a double breakpoint or strong support. When entering a market with only a single stopping point or support formed only by today's low, exit on the same day. Trading is clearly against the trend. Closing versus opening. Closing should indicate the opening of the next day. When the market does not open as expected or indicated by the trend, you can first wait for a change, but you must quickly pick up the profits. Then watch the U-turn. Support, resistance. Look where today's support, resistance, is located, higher or lower than yesterday. Vibration measurement. Where is the market relative to past up or down swings? Look for fluctuations, up or down, of equal length, and with recoveries of the same percentage. Additional considerations. Regardless of the time format, always look for resistance at the top and support at the bottom. The intersection should be accompanied by volume and increased activity. The following conditions are reliable enough to start an uptrend or downtrend. The narrowest range in the last 7 days, 3 consecutive days with a small range, wedge point, gap, increase ADX, with 14 periods, above 32. Practice, since gaining confidence in any technique requires it to be applied consistently in trading. Trading on training accounts can help you gain the confidence needed to recognize that technique and trade on repetitive patterns. Although there is always the temptation to try many different styles and methods, you must ultimately strive to trade in only one consistent manner, or at least combine the methods into your own unique philosophy. System specifications. Some points when trading on short-term fluctuations deserve attention. Understanding the nature of short-term systems can help you understand the psychological aspect of trading. When you consistently follow a short-term system, you should expect a very high gain-loss ratio. Although the objectives of this swing trading style seem conservative, you will almost always experience a positive move. In all systems, winners are distorted. Even with a steady profit, 3-4 really big deals can actually determine the month. It is vitally important to always take your profit. Do not give back on short-term trading. Decision-making. I think it is very important to discuss this topic. Every time you enter the trade, you make a decision. The more decisions you make, the more you increase your self-esteem. You grow with each decision, because each decision has a price. You must refuse the choice or you must make a choice. Conditions are always imperfect. You must allow yourself to fail. There is so much instant information available today to all market players. It would be nice to use intuition and listen to that weak voice in your subconscious mind. Is the trade right? If in doubt, come out. Golden rules. Finally, there are 2 golden rules, applicable to all traders, but especially important in short-term trading on fluctuations. Never average losses. Close yourself if you think you're wrong. Open again when you are sure that you are right. Never listen to anyone's opinion. Only you know when your transaction is down.